Hey guys, it's Dave. Back again, Military Money Mastery. Today's episode, going to be going over the iFunds, international funds. Pretty cool, pretty good for diversification, but we're going to delve deeper into that later on in the video. But just for the intro here, we're going to go over a few little key notes, so it's only gotten 6.48% over the last 10 years, so not super great. 4% since May 2001, again, not super great. A whopping negative 13% last year, almost 13.5% last year. That is terrible performance last year. If you were in the iFund all year last year, you did absolutely horrendous. So we're going to go over, what the iFund is. Is it a safe bet? Can you bet in it? I think you can in certain instances, but we'll go over that. So we're going to go over what the iFund is and just a brief little summarization. So it's the EAFE index. So it's going over Europe, Australasia, and the Far East markets. So that's the rest of the world pretty much. We're going to go over what the benefits are of the iFund. We're going to go over what the risks are, because obviously there's going to be some risks. You can't get that without risks. And then we're going to go, should I invest in this? And maybe you should, maybe you shouldn't. But we're going to go over when you should and when you shouldn't. All right, guys, so let's go over what the iFund is. So the iFund's index fund that's meant to match the performance of the MSCI EAFE, which is the Europe, Australia, and the Far East markets. So basically what this means is it's based off the performance of them. Like, do they do good? Do they do bad? It's going to follow those. So some of the companies that are in this fund, it's kind of interesting. We'll go over. They have Nestle, which I'm sure everybody's heard of. They got Toyota, which I'm sure a lot of people have heard of. Royal Dutch Shell, pretty large international companies. But these are companies that are not based in the United States. So that's what this fund goes over. So we can go over, what are the benefits of investing in the iFund? Well, when the world economy is up, it's really good. It can be a really good investment. I think in 2017, I think the iFund was the best performer. I could be wrong on that one, but I'm pretty sure that it was the best performer. Also, because it's not in the U.S., it has very high potential for economic diversity, because it actually goes through a bunch of different markets, as you could tell, which can be pretty lucrative, and it's usually thought of to be pretty smart to diversify your accounts. And one of the diversifications you could do is to go into an international fund, right? Because then you have so many different markets that you're going into, as not really putting as many eggs in one basket. So let's go over some of the risks of investing in the iFund. In my opinion, this is probably the most risky of all the funds. And comes with high risk is also high reward. And like I said, I think in 2017 it had the best performance, but I could be wrong on that one. So the main risks that are involved in this fund are kind of different to other funds. So you have market risk, right? It's the same with all the funds. It's your risk dependent on how well the market does. It's kind of a given. All these funds are going to be based on the market. So if the market's not doing good, the fund's not going to do good. If the market's doing good, the fund's going to do good. So that's one of the risks. Another risk is a currency risk. So the EAFE and the iFund can raise or fall based on the current value of the US dollar, which is, in my opinion, it's pretty hard to track. It's not as easy to track as some of the other markets, or as like the stock market to track. So that's one of the biggest risks, in my opinion, is I don't know how to track this fund as well as I know how to track the US funds. So lastly, as far as the risks go, obviously you have inflation risk, which is actually through all the funds, and that means that it's your risk there is that the fund may not beat inflation. So inflation, average about 3% per year. So if this fund doesn't beat 3%, you didn't beat inflation, which means technically you lost money. So that's something to think about too. That's one of those things that most people don't think about when they're talking about funds, because even the S or the C or the F and G funds, they can also lose to inflation too. So why should I invest in the iFund? Well, the iFund's pretty good for diversification, like I said earlier. And if you're really confident in the foreign markets, and you know how to track the foreign markets, and you know where to look, and you know how to check the currency conversion rates and whatnot, you know, maybe it's a good fund for you to invest in. For me personally, I try and stay away from it. It just seems a little bit too risky for me. I know it has a really high reward, but you know, it's just, for me, it's just a little bit too risky. But it can be very lucrative. I know if you were invested in it in 2017, you did very well. So we'll kind of go over, and like you guys know, this is that that PDF sheet that you can find on the TSP website for each fund. It's iFund 1, you know. Here it shows the top companies. It shows growth of inception since, you know, May of 2001. You can see like where the percentages, like the rates of return are here. Here it tells you like the different holdings that are, so you got Austria, Belgium, you know, all the European countries. United Kingdom is the highest percentage, and then you got, you know, Japan is the highest percentage in the Australasia or Far East area. So that's kind of interesting to look at. You know, like what if Japan's market is just really freaking booming this year? You know, okay, we'll get into it. So, you know, like I said, this is the TSP website. We've gone over this before, but click on investment to learn more about the iFund. Click on investment funds. Click on the iFund International Stock Index Investment Fund, and then you got key features. They got a cool little video here for you to watch. The video is actually really informative. Then you got the performance area. As you can see, you know, pretty high, but also this doesn't show 2018, but I think, or 2008, which I think 2008 was, where does it have it? Right here. You know, that's like negative 40 something percent, I think. So that's kind of interesting. And this right here is from 2017, so don't let this fool you. Like, it definitely didn't make 25% in 2018. It made, I think, what was it, negative 19% last year or something like that, or negative 13% last year. So yeah, it's kind of risky. In my opinion, it's a hard investment fund to track, but it can be lucrative. You know, look at this right here. Look at this. Those are really good years, but you see, it's kind of hit or miss for me. Here's some growth charts. So like right here, this is performance of the funds, and you can tell the S fund is actually done the best, then C, and then F, G, and then I at the bottom. So as far as like total investment, total growth, like iFund hasn't really been the best. So here's a little bit better performance graph of it. You can see 2018 was pretty low. 2008 was like negative 43%, so that's ridiculously low. But you had 2003, which almost did 43% positive. So, you know, it's kind of hit or miss. It's just really hard to follow. If you're going to invest in this fund, I highly suggest that you read into it more. Try and get a better understanding of some of the companies that are up here, or some of the countries that are up here, and just figure out, you know, is this really a good fund for you? Can I make money over this? And know when to get out. And that's one of the hardest things to do, and is just to get out of a fund. You know, you see it dip one day, okay, not too bad. See it dip 2 days in a row, okay, not terrible, but I'm definitely thinking about it. Dip 3 days in a row, like, should I get out? You know, that's up to you. But just kind of figure it out, you know. And the fund can make you money. I'm not saying it can't, but it's one of those. This is one of those funds that if you're going to invest in, you really need to pay attention to it. Otherwise, you can fall on your ass as far as your TSP account goes. So anyway, I know this is a short movie. It's a short video today. I just wanted to get this iFund video out there. I don't really know tons about it, but I'm more than willing to answer any of your questions. If you just leave them in the comments below, we can go over them. Please like and subscribe. I know I say it every video, but you know, it really helps out if you guys could do that for me. Check out our Facebook page, and we'll try and roll out some videos next week about the FNG fund. I'll probably put that into one video because they're pretty similar. And then probably moving forward we'll go over some of the L funds, and I'm not too sure what the future holds, but we'll work on some new things, you know, maybe after we go over those L funds. Anyways, guys, this has been Dave from Military Money Mastery. Thank you guys so much for tuning in, and I'll catch you guys in the next video.